Am I audible?
Yes.
Yes, sir. Very well. Welcome, sir.
Thank you, ma'am. So, shall I start?
Sir, good afternoon, sir. Open. Sir, shall we proceed? Good afternoon. Welcome to Session 12. Technology in financial market will be handled by Mr. Anuraag Saboo. He is the co-founder and director of Fintech startup Gumption Lab Software Solutions Private Limited, Bangalore. I'm happy to introduce our chief guest for the session. Anuraag Saboo is the co-founder at Fund Expert Fintech, India's leading wealth management software provider, and traderscockpit.com, India's leading stock market analytics. It's a stock market analytics portal. This Traders Cockpit software is available in our SRMIST Fintech lab. He is also the holder of Chartered Market Technician certification, that is CMT, issued by CMT Association USA, and CFP certification from Financial Planning Advisory Board USA. He has also done PGDM from IIM Bangalore and Electrical and Electronics Engineering from IIT Madras, where he has received gold medal for having topped his engineering class. He has over 25 plus years of work experience in varied industries, and he has been actively trading and investing into equities and commodities on Indian exchanges for over 18 years. He is also holder of CFP certification, equity derivatives certification, research analyst, and investment advisor certification from the National Institute of Securities Markets, and algorithmic trader certification from ATME. He has been regularly teaching about financial markets over past 9 years and has conducted over 275 workshops and trained over 5,000 students till date. He has conducted training session for NSC, BSc, MCS, and many other organizations. We are happy to welcome you, sir, on board.
Thank you so much, madam. So I'll just share my screen.
Sure, sir. Thank you.
Thank you, ma'am, for the great introduction. So, welcome to the session, everyone, on technology in financial markets. So, as you already told, I am from IIT. I came from this background, got involved into trading into equities, commodities, and my passion became my profession because I acquired all kinds of virtually the certifications which are needed to operate in this area, and I am also actively using it for various kinds of usages, and obviously acquired all kinds of certification. One needs to professionally practice and apply this and building technology products about it. So my passion is about building technology products around all these financial concepts, and that's why we have two software firms for which we won a lot of awards and recognitions. Traders Cockpit has been recognized by the top 20 Hall of Fame 2016. My personal passion has been to drive financial education. That's why I've done 275 over workshop with 5,000 people, and I train trainings for various people. So that's kind of background I come from. And now let's get into our topic. So our topic today is all about technology and in financial markets. So technology is actually, if you look around, you can't discount the role of technology in modern life, whether you're doing socializing, commuting, spending, learning, anything. Technology has a major role, of course. We are at that stage of life where you can't envision life without technology. So it is like a taken for conclusion. Now, how does technology come and play a role in financial markets? I'm sure you have seen over a period of last so many days in this wonderful session which are being conducted by so many eminent speakers, how technology impacted different areas. Today, we will be focusing on how technology is going to impact and shape in our stuff, or does impact and shape in financial markets. What does it need to take it for the challenges we face it? What are the impacts we see? And how does it impact all areas in and around financial markets? Okay. So coming to that, say technology in financial markets is very much revolutionized, because financial is something which is an area where technology is probably not impacting it. It is the core. It has become the core of it. Okay. So technology is shaped various areas of life, but financial markets, we don't say technology impact. We say it is not technology only. It is like technology is the core of it. Okay. So today in this session, we will discuss the role played by technology in financial markets, how technology has changed the course of financial markets over time. What are the latest trends and themes in transformation, in technology transformation, which happens in this journey of financial markets. So we will look into all this and we will understand all of it. Okay. So if you look at the history of financial markets, it has come a long way. In old times we had floors. So it used to, it continues to look like this. This is a New York exchange floor where people are, new is launched, basically a floor, and if you go to Bombay Stock Exchange, they have a floor. So every financial market had a floor, and these floors, things evolved. So, the word stock market investing, when you said with financial markets, the people thought of the image of people shouting and buying, selling orders of the floor of the stock exchange. That was how it was perceived, or it was the way. When the first telecommunication made the breakthrough, or the telephone made the breakthrough, that was the first time technology started coming into financial market. Otherwise, it was a physical market. And that led to, over a period of time, telecommunication led to internet, computers, internet, and rest, as we say, is history. So that's today, technology is at the very core. It is, if you compare with the old time physical on the floor kind of a journey, compared to the type of the environment we have today with the modern stock market, technology is the very core of what we do. All the trading, investing, what we do, everything and anything, from orders to transfers to virtually everything, is done by electronic mode on use of technology. So if you look at that, if you look back, you will see tremendous change has happened, and India's stock markets are today fully electronically metallized exchange. That means we don't have any physical interactions for placing orders. It's all happening on electronic mode, and electronically enabled exchanges are there in India. And India also enjoys the same kind of a technology impact in financial market as the world has. Okay, so let's see how our journey further goes. So today what we say is that using technology is not just the thing, it is the critical, it is the forefront of financial market, because when we are trying to execute business decisions, when we are trying to execute operating strategies, technology is the critical component for doing all. So that's how the impact is, or has been, in the financial market. There are several ways technology has changed and shaped the current affairs. The way you see in today's times, the current affairs on technology, several ways technology has made impact and shaped the current affairs of financial markets, and also the future direction of our. So not only the current and the prospect of future, everything is now changing and getting shaped by the technology, the way it is impacting these markets. So the first way, there are various ways we'll see. The first, and we will get into the various impact, how it made and how it has made it difference, and what it is making it, what those factors will then lead to. The first way, obviously, the technology is making impact in financial market is by ease of use. Thanks to all the technology which we have impacted in the financial market, it's now easier than ever to transact in today's financial markets. And let's see what kind of factors, or how ease of use is turning out, what kind of factors are driving the ease of use, how the adoption of technology is making everyday's financial market totally different. So there are various factors which are driving it. The first factor has been the development of next generation online brokers, which all emerged thanks to all the technology pieces which we have today. The thing about the stock market was that you don't go as an individual or any participant, don't directly do business with an exchange. You conduct all your trades and investment through stock brokers. So previously, when the technology advancement was not at its peak, then we had to rely on telephonic conversations or manual outreach so that the deals could be made. And obviously, you add on the top a lot of paperwork. I think it was truly a mess. I remember when I opened probably the first Demat 2003, there were some 35 pages of different, at least which needed to be signed. Some 50 signs were needed all over the place, needed all over the places to do that. Today, and if you have to do any transactions, you have to actually reach out on various kind of methods. But thanks to the new age generation, the new age technologies, the new generation, next generation online brokers, they allow you to venture into stock market in just a single tap. You just tap on your phones, on net, and you are there placing your trade or placing your orders. So, and obviously here, the impact which you can see is from the smartphones. The penetration of smartphones has led to technology being a kind of in your pocket. So when you talk of technology, smartphone is the most important thing you can today relate to, because it's the most is the common stuff. It's like a phone. It's the thing to be have with each and everyone, including today even kids carry this kind of stuff on their and thanks to all the COVID and need to be ever present online for education, everything, it is like today virtually it's flooded with everyone, or every individual out there has it. So in yesterday's years have been past where corded phones used to have thing, and then you were confined to your home and office, because when you had to do communication, you were not restricted to you were restricted to a particular place, or you have to be at a particular place to do that. So you have to be in front of the terminal to do that. So all these are are gone. With the development of smartphones, what has happened is today's people can simply know about stock market, they can read about it, they can learn about it, and then they can invest on that all on the go. So basically you are making your investment decisions on your fingertips. You're virtually sitting anywhere around the globe. You just browse off your apps, your platforms, and you are just placing and you're taking investment. You are participating in financial markets for anywhere. So anywhere and everywhere becomes the next mantra, which is the term. And it is made it like today investing is as easy as online shopping. So in fact, people say that you and as safe as online banking. So investment is online, is the way now people transact. It is not just you shop for stuff, you invest, you do bank, everything you do online. That's how it is. And thanks to advantage of advance of technology and the smartphones and the investment apps, because now everything you virtually ask someone on approach, he'll say, you have an app, or is there an app? And people download apps, they use app, and apps had made it more than easier than ever to access the financial markets. So the financial market access, what else is been democratized, where at some point of time, if you go to say 80s and 90s, it was a prerogative of selective people. Today it is democratized virtually. So that's the first most wider impact technology has made in financial market, made it accessible to anyone, anywhere, and of any class. So you don't need to be a network or a networked person anymore to deal in financial markets. Second, you can simply browse the investment choices. Now you have plethora of mobile apps provided by brokers, your advisors, and you use them to browse through choices, place the order as per liking, and you oversee your portfolio a single tap on every day. There are people who monitor it, like open the app, look at the portfolio, look at the site with a single tap, and instantly make any changes they're looking for. That's very, very different from those kind of early days when you have to be at a desk and you have to yell out orders and you have to constantly check what happened, whether those changes have been incorporated, whether dividends have reached, whether shares have been transferred. These things used to be a manual effort, virtually everything, and everything needed to have a manual checks. You had people looking after it. You have to write letters, you have to attach proofs, and then you have to wait for snail mail to tell you whether you are really received or not. I remember when I was like in 96, 97, the dividend checks used to come on the post, and there was a regular issue of things not happening, checks not getting delivered, shares not getting transferred. It used to be a major chaos or change out there. All that has today become anytime, anywhere, because now you have an app. It sits on your smartphone, which it brings all the financial technology inside it. So it makes it basically you're less restrictive, easy access, encourages more and more people to come and trade. In fact, if you look at the number of demat accounts which have opened in last 1 year, it exceeds the number of accounts opened on any of the years before that. And in fact, total number is almost double the number of people who are trading on the markets. So this kind of, and all this could only happen thanks to the technology embedded in financial. And now, because technology is embedded in so much great detail, it has opened a wide range of possibilities of what further it can take it to. And it will obviously, it has started influencing the way people are traded, is the way influencing the way people make decisions. It is changed virtually each and every aspect of financial markets. First, obviously, it has made it most user friendly. The way you could have, if you had seen any of the earlier platforms and how people traded, and you see today's platform and the way to do, you conduct your buying, selling, watch list, all with very sleek platforms offered by these online brokers, online fintechs, and these kind of investment platforms have added new user-friendly interface, because they entice the way, in fact, the way it has said that some of these interface itself has been the enablers to entice people to start doing it, and they make it very easy for them. The way when you are all these investment words or technology or jargons, they used to be full and messy and time consuming, they're gone, and they're simply taken over by the new generation online interfaces and things like that, where few symbols itself tell you what exactly you need to do, and it's like so clean and easy to virtually do any kind of transaction you're looking for in your. So that's the second, the ease of use. So ease of use came from your software, from your from the smartphones technology, then the app technology, and then the interface, the new modern designed interface, which are light and sits on a mobile, and then have the app. Then is the transaction cost. The second enabler of making the transactions which are happening today a huge number, much bigger and major. If you look at the turnovers the exchanges are driving, is another level altogether compared to what used to be 5 years back or 7 years back. So because today these modern age, new age brokerages houses and technology houses, they have been able to operate with substantially less overheads because of technology. The number of manpower you would have to manage the number of customers is immensely reduced. Earlier you used to have much higher, it was used to be manpower intensive. Today it's financial world is all about technology intensive. So the substantial lower overheads, substantial reduction in charges and fees. So this has made enticed a new kind of trader or to the markets with a much lower amount of wealth. Where earlier when getting into investment and trading was only a domain of high net worth guys, today it is no longer that. So you very much a lower amount of wealth is now tapping these markets to utilize these markets for savings, for investments, for trading and all that. So you are basically effectively utilizing the market with a very, very low amount they want to invest and worthwhile, because now these amounts which they invest, their substantial is left back because you hardly are paying any fees for managing this kind of. The amount of fees has gone to the rock bottom ever, is the lowest ever, and the amount of money left for you to invest is much higher. So it attracts a new kind of people to come to the market. And then they are got new age softwares or technology or websites which are available, which offer you facilities like free trading, free investing, kind of basically which you can also call it mock trading. So you can actually participate and learn on a real market with unreal money. So basically you are playing with what we call as a pretend money, but it gives you kind of a learning experience which could not have had before with the earlier way where you had in earlier times there were people who were doing that, but that's called paper trading, and that was never a kind of, that never gave a feel of you actually doing a real market, because paper being paper, it could be crossed or cancelled or anything. But a real kind of scenario today can be created through these software and websites which are offering you these kind of experience with pretend money, and you can play around with you can actually take decisions, see the impact of the decisions, how that risk reward trade-offs, the kind of risk you are exposed to, That's much easier to get to in today's world with today's kind of technology and software available. So it's much simpler to use, much easier to use, help you track investments, and give you a very good immersive experience of what exactly is all about before you actually risk a real own money. So that kind of environment is now available or can be created thanks to all the technology there. The second way, so one was the way the technology impacted the financial market was building this ease of use and all these methodologies through which entice bigger and larger audience. The second way technology is impacting is about speed. Technology is making transactions in financial market happen faster than ever, faster than it probably ever has happened in time before because of the technology, the speed. The speed of transactions are faster than ever. Traditionally, if you look at trades were done by shouting one human to the, then from one telephone to another telephone, and then from the internet, and now being 4G, 5G, and all kinds of faster internet and desk, and then VSAT came in between, and then finally internet came in. Today it's all about a trade terminal is virtually sitting on my own screen, and every screen has that kind of a terminal across, and you have these faster transactions. So more trades are occurring, and when market changes are occurring, investors or traders are able to react faster than ever, quicker than ever possible. And because they are reacting faster to new information, new changes and all that, that means markets are now trading and changing much faster than ever. So that kind of has made the financial markets also behave in a, in kind of reaction time is gone to another level altogether, which used to be. If you look at kind of third way of the way it is impacting, so the first way it impacted technology impacted market was ease of use, second was the speed, and third way is the depth and availability of information. See, earlier times, because in the absence of all the technology penetration into financial markets remain an abstract piece, only could be deciphered by a few people who could not have depth. So it's almost like impossible to do or make any decisions on your own, because it will be virtually you needed someone to guide you or tell you, a physical human being to approach us, and that also his limitations will become your limitations. So third way that it is impacted is making the depth and availability of information gone to another level altogether. Now, thanks to the rise of the internet, availability of information which allows people to make informed decisions in markets is easier than ever. Well, instead of relying on other, and how people used to take decisions earlier, they used to call someone who knows someone and who knows something, and this to rely on other people's recommendation and analysis. Today, a person can take an informed decision on his own, because for him today it's much easier to access any real information about a company, the real and make consideration or decision making on his own, whether it will not be, whether or not it is going to be worthwhile. So the availability of information and the type of information and the range of information and the depth of information is another level altogether. In fact, we are now facing information surplus. That means we have more information than probably we need to make a decision. So today's techniques now is not about, earlier time technology was bringing information. Today, I think the technology is now evolved to data analytics to reduce the information to make it relevant information. So the point is that has become another level altogether, and that is all the impact of technology on financial market, which makes the information today is happening anytime in any market anywhere available to you in a second, in a minute or second across the entire globe, and you use that information to do something is be like instant. So the information is now more in depth as well. So now, like I said, technology now needs or is able to perform, because you have so much in-depth information, it's able to perform complicated algorithms to analyze complicated data to make more informed or educated opinion. So there are various companies which provide these kind of real-time data, and which includes your broking platform, your various portals out there, including Traders Cockpit being one portal, which allows you to analyze and completely understand up-to-date information about what's happening in the market and see the start of any kind of an important change or potential trend or anything, so that you can take advantage of it or you can capitalize on it based on that, and which will also help you impact your portfolios or managing portfolios. So all this is now much more, all this is now happening real time, which used to be like, get me a report and the report comes third day. It's like get a report on a click. You click, you have the information, and you see and thanks to all the AI and the thing which we'll discuss in due course, it is all coming back into a decision-making dashboard in an instant to help you gauge what's changing, what's happening, and take advantage of that. So ways in which this depth and availability is impacting financial markets. Let's look at some of these ways. The first way it is impacting it in a way is helping track personal finance. I used to remember when, I remember my parents or they're doing personal finance means they're going to be a physical sheet, or they used to feed in some kind of Excel sheet. In later we have the older ones only on, used to have papers and journals and books and kind of thing where you write all the incomes and expenses, and or later on it became a kind of Excel and things. But thanks to technology, these things are now thing of past. Today, the personal finance app and the stock market apps and all these are now kind of connected and linked to each other. You have savings and money to invest, you get a pop-up to invest. You will ask for you that. So there is visibility of personal finance of a person is now available thanks to all the technology which reads the kind of portfolios, or the portfolio information is available to you. So you can be given relevant information and you can track your personal finance through those. In fact, one of the apps where one of my companies building, which is called Fund Expert, is one such app which is used by financial advisors and institutions across the world to help track all the personal finance portfolio and all kind of stuff. So very visibility of finances are there, and once that is there, you can easily calculate and understand looking at the portfolio.
Can I ask, ma'am?
Hello.
How did you get the data, ma'am? Actually, you said it is from money control.
Is there a question somebody's asked? I'm sorry, I think somebody's chatting. Can you?
I think they are speaking to themselves.
Yeah, I guess. I thought parallel session has started on this. Okay. I guess I'm not the host. I can't control, but I request those who are speaking, please kindly mute yourself so that not able to figure out who is the person. So I guess. Okay. I hope. If there is an organizer, can you please mute?
No, ma'am is asking about the number of active clients. That's where I told him I have taken it from the number of active clients.
Sitaraman has to mute.
Yeah, but I can't do it because I'm not the host. I need to do that. So I guess. Okay, I guess we are now back to numbers. Yeah, this kind of things happen.
Yes,
There's
sir, I have muted the person.
Okay, thank you so much, man. So that's another intrusion of finance. You can see the technology, how it brings personal discussion of some person can become a public discussion also.
Yes.
Okay, so anyway, so help track personal finance, and that's where you get kind of visibility. You get visibility of personal finance, you also get visibility of personal conversations, like we got a live example of that at the right time. Okay, so here we come to a personal finance app. So if you know finance and stands correctly, then he can indulge in stock market. That's where personal finance comes in play. It helps to provide overview, track the investment, manage the budget, and help them to understand where exactly what they can do to get their savings in place to invest in financial markets. Because today, if you don't invest, you don't build your savings, and you don't invest, then it's going to be a major issue in the time to come. Because when you make your retirement plan and you see the amount of expenditures and all that, so this is a very kind of a boon that a person can do and track on his own, thanks to all this personal finance. Then once you have this, the next element is all about robo-advisor. The advisor being transforming from a manual to or electronic one. So when the technology was no stage, advisory was all done by manual. So there were a lot of advisory companies across, and people had to do telephonic conversation or meet in person and then get those services and all that. And the promotion of these services also used to happen by word of mouth. People used to know, okay, he's an advisor, so go and meet him or talk to him and go get that idea of what. But today you have advisory in one click. Today you're sitting in like technology is forefront. You need an advisory service of any kind, including financial advisory. You can just get over advisory on any platform with ease, with one click. You can not only see the advisory services, but you can see the past performance of the service. Because now thanks to all the electronic data management, the past performance is seen very clearly, so that you can choose whether you really wanted, is this advisor the right one for you? Is the amount of risk or is the amount of performance is something what you're looking for? So this allows you to do all these kind of stuff. And thanks to all this is again the impact of technology on the advisory and the advisory management feature. So obviously now technology has reached a way that robo-advisor is a reality. So today financial planning, stock market advisory, all these today actually with little human interaction, but with a lot of robo components or electronically managed components, technology managed components inside it. These are now available. So you can virtually, they can offer you suggestions, advisory tips, all this at a pretty minimal cost. And they can also give you how, they can also look at your portfolio, tell you whether how you need to balance it, look at your tax, kind of thing, implications of that, and then tell you where you'll get less impact of tax benefits or where you can harness tax benefits for your portfolio. So all these are now today a reality and a kind of a taken for granted thanks to all the technology penetration into these stages. So there obviously when these technologies, so these were the different ways how technology has made changes in financial markets. Now we're looking at, if you look at the financial market participants, such as brokers and all that, and now what challenges they facing with the new kind of new age technology which is coming in and needs to be integrated into financial market solutions, or needs to be built, or financial market solution needs to be built around these new technology solutions. Obviously, there are certain challenges they will face while trying to integrate. So let's look at some of these current challenges which they face when they try to integrate. The challenge number one has been the cost. The cost of integration or of a new technology or is always going to be constrained because technology evolves, and with evolution, it demands new funds to upgrade, because technology is not something as stagnant. It's not technology is integrated. I've done that integration of technology. I'm enabled. Technology evolves continuously, just like our everything is evolving with us. So what happens is when every time you evolve and upgrade your technology, obviously you'll need funds. Because you need to spend on new age components, development, setups, architecture. Everything requires spending, and that's why there will be constraint of budgeting and all that, because you will now cost of managing and maintaining all these high-tech platforms is going to be again it will take a lot of take a lot of money and constraint to do that. So that is going to be the first challenge when they try to upgrade to these kind of technology solutions to meet up to today's requirement or environment needs. The second challenge they'll face is all the management of this tech companies. One is about spending, second is the process itself. And what happens, most of these brokers, they are this kind of old age financial participants, let me put that way. They have complex and very inflexible older legacy platforms, which are not at all compatible with the new age needs or requirements. So now those are legacy platforms. They continue to be there and they continue to manage. A lot of data is around there, a lot of development is around there, a lot of product components are around there. So a lot of things are already deployed on older legacy systems. And now the brokers, especially I'm talking about the ones who have been there for a long period of time, they need to manage as well as the old one, the old legacy platforms, deployments, as well as upgrade to newer age, modern cloud-based architecture at the same time, which is compatible with modern needs of anytime, anywhere kind of requirement. So these both need to be managed, and that's technology upgradations, managing the process, the downtime, the challenges of two different technology stacks and teams, and internal team and external team. There are lots of challenges which they will need to face while overcoming these things. So that's the challenge number 2. The third challenge will be compliance, because now what happens is a lot of compliance needs or systems or designs or even compliance requirements mandated out is thought is all based around old pen paper model. So basically the compliance is assuming you will take client signature here, you will take client signature there, you will take this, you will take this components, and today's is all one touch thing which is happening. So a lot of onerous compliance needs are needed, especially because compliance has its own regulations, and compliance has its own necessary requirements to ensure that things don't go haywire and things are in track and all that. And these needs to be managed. At the same time, you also need to bring the new age technology. So managing these onerous compliance needs, which are specially thought based on legacy systems or legacy methods of operating, where you don't have people across, there still is going to be a lot of, it will throw a lot of challenges at the participants of financial markets. So that's the next set of challenges. So these are the challenges, some of the challenges which they need to overcome when they need to move to newer age platforms. So what next? So what is the next? When you talk about technology, everybody wants to know what is emerging, what will the impact, what are the next things you'll know, and there are lots of things here to talk about. We have a lot of new emerging technologies. So obviously some of them have already seen interpenetration and some of them will see penetration. So there is always a set of technology. Right now, some are very hot and some will become hot in time to come. They are already started talking about, but they will be there across. So let's look at some of these new emerging technologies, and also then we will also look at how impact of these technologies will make changes in the way we operate, manage, run, or use financial markets. So what is the impact of these emerging technologies in financial markets? So let's look at what are the new emerging technologies we'll list which are today coming up and impacting. The top of the list is obviously start with your artificial intelligence, which is AI, and machine learning, which is all about intelligent decision making by machines. And then comes the data science technology, the one which powers all this kind of intelligence. So because the amount of data now, thanks to every data which is captured, all the trade data, participant data, user data, and all kinds of data going around, there's a big amount of data available which needs to be crunched. So there's a technology subsector known as big data, which uses to crunch all the data. Then there is a set of data analytics and algorithms which will help you to crunch and come out with the decisions on that. And then the new age, latest cutting edge technology, which is distributed ledger computing, also popularly known as the blockchain, and which is currently being most popularly used for cryptographic currencies. But they still remain, keep aside the cryptography, even distributed ledger computing, which is blockchain technology, will be leveraged or in a much bigger way in time to come to further all these technologies. The purpose is to leverage all these technologies to simplify, automate, and then improve the user experience. So you will simplify all the systems mechanism. It will automate all the transactions, all the need to comply, and need to record and improve the user experience at the same time. That's the power of all these emerging technologies, which you are going to see the impact in now. So the first obviously is about artificial intelligence, and what does artificial intelligence obviously will impact virtually everything, is impacting virtually everything. Here we'll look at a specific area of the financial market. So artificial intelligence becomes a new area of investment or investment decision making. Let's put that way. So what's artificial intelligence all about? It's like an umbrella term for all kind of algorithms and technologies which allow a machine to simulate human intelligence by learning or by self-correction or self-learning. So that means it either learns from an existing human or it learns on its own through acquisition of the rules or information, whatever it needs to understand and make decisions. Then using reasoning which can again be derived from existing human-based train or on its own, to enable it to come to a approximate or a definite conclusions on which it takes the decision. And then looking at the output of the decision, it will now then learn to self-correct itself to become even more better. So that's why we bring with a with artificial intelligence. A lot of debate is there and kind of thing, because when you allow such technologies to learn, reason it out, and self-correct and become better, eventually you are moving to a point of singularity, which is a very contested term in artificial intelligence field. The time in which the time after which the entire human intelligence will be surpassed by the machines. So the machines will be much superior to humans in virtually everything. So that time, or that thing they call it, the term is singularity. When that reaches, virtually machines will become much more superior in every aspect to human in everything. And the time, the anticipated time is somewhere in 2050. But the way technology is emerging, again, these are only timelines which are like, it's going to be surpassed at any point. It means it could be much earlier than that. So things is like that, the way. So artificial is it's hotly talked about, hotly debated about. It's hot topics. But right now it's a very inception age. So it's kind of, it's not something to be worried about. It's something to be used and grow with using that. So it's something which has created waves, not in stock market, but everything wherever it is being used. Previously, the stock market has been merely limited to human intelligence and decision-making abilities. But today, all the flux of AI means the horizons of financial markets are widened plentyfold because of the ability to make decisions growing another level. So AI-based predictive decision-making takes you to that ride where your investment decision-making capacities have tremendously increased, because now you're able to see much larger amount of data set. Using that, you're able to build in much bigger predictions and research than a human being can potentially do. Obviously, it is helping you to bring the emotional bias, because machine being machine, the emotional bias component will be very, very low, and they will seek rightful decision making in terms of the parameters which are defined for. So the biasness will reduce. Decision making are supposed to be more streamlined, and then the speed of thought, all this will have, what has happened is basically the type decision making speed is going to be another level altogether, because of thanks to all this technology which powers all this AI. So obviously it has started changing the stock market. I would say a lot of investment platforms and advisors are now using AI to drive and gain a competitive edge in the kind of decision making, to become better and to drive and to achieve more what we'll say more parametric driven decision making, which are more in tune with what they are seeking for and being better. So all this is happening thanks to all this influx of AI into the decision making, which is happening at a rapid speed. So that's why we say this is all pervasiveness of AI everywhere, increasing opportunities for brokers as well as technology providers to use AI. So they can use that to reduce cost, reduce risk, and reduce the decision-making effort. So optimize that. So it has been, and it is already very, surveys have told that, but it's like considered today, you can take for granted that using AI will be considered as normal. Unlike today, when you use AI and something unusual, it will become as usual instead of unusual. So what we say is, because it's like you will go to workplace and you will click on that and some AI assistant will come up and you will ask for some kind of help to get started with, and that's how it will take off. So it will be like increasing deployment of AI across different functions. It will start primarily, it has already started primarily trading and risk. So there the amount of the investment which is managed and optimization needs are much more higher. And obviously, but it will permeate to all kinds of other areas as well. It's just a matter of time. So it will basically, if you look at AI applications, which areas that these AI technology will get embedded in financial markets, it will target abilities like natural language processing. So speech recognition and natural language recognition, NLG and NLP, these are first criteria. So that will basically, that means the client interaction, instructions, and all that you are taking off, and AI is taking care of that. Then next goes to the reading of documents. So unstructured, a lot of unstructured documents the financial market used to create, but thanks to optical character recognition techniques and all kind of things, it will be ability to read all these kind of documents and auto configure, auto populate, and a lot of stuff. So we use such kind of technology, in example, in our fund expert, to read all kind of portfolio documents and all that, to basically, without any click, you get the entire data of a portfolio of a customer since the day he has been started doing investments. You can just get in one click. That's the power of optical character recognition techniques and all that. And once you have these kind of techniques, then obviously you can extend it to manage your trading risk analytics and keeping an eye on those kind of parameters, so that they don't reach a number or something where it leads to those kind of monumental risk failures, which has led to those stock market crashes in the past as well. And then obviously social network analysis to keep abreast of the latest happening across the financial world. So all these can be done. And obviously there is one very important area where this will be used, where you will see this much more, is called reg tech or regulatory tech. So where what will happen is also kind of, it's a combination of fintech in regulations. So it's a subsector of you can say of fintech. So what happens here is the supervisory army of regulators, like, you know, like in India, you say have SEBI, you have RBI, these are all large regulators. So they will use, and some of them are using, I know SEBI is already using it, and I know some of others also started using it. So they're all using these kind of AI technology to monitor and process data from market participants. Because if you look at the amount of data these agencies receive from the entire investment world or financial world, they're huge. So it is virtually impossible to monitor it any other way. So unless you use some AI-driven technology. So here AI-driven technologies allows you to monitor and process this data, gives you greater oversight and assessment of what's actually happening. So that's the trend, what is current trend. So they can take preventive action if they want to avert certain thing, and risk management. So they can potentially measure any risk events or potential of any risk events. So gives that allows, or basically ability of by allowing this AI technology, it allows or it gives a greater potential for regulators to react more quickly to market developments. So the regulators have great potential and they can react more quickly to market developments and things, and then they can design regulations rather on, instead of guessing, which is what currently they do kind of, you know, surveys or kind of thing, and they're still left primarily guessing because they don't have, if they don't, they're not doing this, they're not getting a real-time insight. So they can be little proactive in that, and that will make a lot of difference. A proactive regulator will make a lot of difference in growth or management of any sector. And same thing, so they can now design regulation based on a very accurate market assessment rather than not so accurate opinions which they gather from different people, because now they're gathering actual market. Yeah. So I request to stop conducting a parallel webinar and allow me to finish. Okay, so can the host please mute Mr. Mirza Bey? I believe he has something to communicate to somebody else. Okay, thank you for that. So we move on to the next point. Kind of, I guess is active still, I guess. So okay, so kind of, okay, we move on. So we look at, next thing we want to look at is the challenges in the AI implementation. Okay, because now you had seen that AI will be getting extensively and it will use. What are the challenges which will come up? So as you see AI, you know, continue to evolve, there will be challenges in AI also. It's not going to be very straightforward. You know, it's not just walk in the park kind of thing. So AI solution continue to evolve. The brokers will need to ensure that these AI applications, what they are deploying, they also have levels of transparency and explainability of decisions. Now this why I put this in quote is because if you have used any AI application before, the AI application ability to explain why it is doing has been very, very low, much lower than what any regulation will be comfortable with. So now there's actually a parallel science to understand how to convert the decision to have explainability enough to ensure that they meet the regulator obligation as well, because the decisions may be superior in hindsight, but when you're taking those decisions in the time, and then if there is no transparency or there's no insight into why these decisions are being happened, what kind of evidence is that they are doing it. So how are you ensuring that they are not false, they are not unsuitable, they are not unfair, they are ensuring that they are properly appropriate. So these are kind of regulatory obligations which they have. Now in normal days, when you are taking a decision where AI is not involved, it's very much there because you can assign, you can explain, you can give different regulation, you can make different systems to explain the decision, you can document it. But in an AI black box kind of model where data goes in and decision comes out, this is going to be a real challenge to evolve in. This is going to be a real challenge for financial market to present the evidence that they are going to fulfill all the regulatory obligations of being suitable, appropriate, and fair decisions. So that is going to be a challenge. The second challenge they are going to face is going to be the data, because second thing, most of all AI applications are dependent on good quality data. So they are assuming the data you feed data. So what works, what is true for computers, they say GIGO, garbage in, garbage out, works for AI also. You put garbage data and you will end up getting AI decisions which are also worth nothing. So that means a good quality data going to this application also means the data needs to be processed, managed, and which means that there has to be internal data policies and which needs to be reviewed and updated to address inaccuracies or bias, okay, in different kind of input data, and to review the output of the applications. Okay, so there has to be, it should address the inaccuracies and biases, and then it should review the output, and then bring in human intervention wherever necessary to analyze it. So now, new age applications will bring new age issues and requirements like internal data policies, internal data officers. There could be now in more modern companies there is a chief data officer, like you have a chief executive officer, chief financial officer, you have a chief data officer who is responsible to make sure that the data which is being used is anonymized, is not biased, is accurate, and it is not being misused, and all kind of stuff. So this is all going to be next. And that's where we come to the data. Now, if data is going to be large, bigger in size, then what you need also is going to be
turning up. Oh God, I'm really crossing fingers.
Okay. I understand the problem of the viewer, but I empathize with them also. But I have to still continue with them.
Yes, sir, I have muted the.
Thank you.
I'm there.
Yeah. So we go to the next topic, which is called big data. So in big data, what happens is basically it refers to your collection of analysis of a large amount of database or data sets. When that is collected and analyzed, and huge amount, we are talking of terabytes, gigabyte kind of data. The amount of terabytes of data which needs to be crunched is used. So that when you try to do that, that's where these big data techniques come into play and do that. So that's the new basis of research. Today we say you want to take decisions, big data is going to be around. So it has been major part of, it has become of modern age functioning financial market, because a very simple stock market itself has 1 million data points occurring every day for a single instrument. So with the use of big data, now these can be substantially measured, analyzed, and they can be used they have been found very crucial for measuring sentiments, for predictive future outcomes and all that. So that's why they become now the basis for research. Today's lot of top level companies and all that, they use this kind of big data kind of understanding for research and application in stock market. Okay? So that's been kind of used. So we go to the next aspect. So when you have this big data, naturally, when the big data also brings the kind of big data also bring the kind of a data analysis which you need to do. Okay, so the kind of big data that data analytics what we need to do, which you learn in this webinar, is which I'm going to cover here, is all about data assets and how we can take the insights from these data assets to improve decision making. So a lot of data analytics will come into play, and which you need to understand what we need to do on that. Okay, so data analytics means it will be control and management of data assets, and then generation of insights from these data assets to improve your decision making. So you will, and as a financial market participant, there are going to be a lot of data which you will come across, and the core data which you will come across will include client data, product data, account data, employee data, transaction data, positions of the client data. All this data will become part and parcel of your decision making system. So what you need to understand from this core data and the client data and all this kind of data, which you need to understand, is like the amount of data is huge, the amount of different types of data is huge, and that's why you kind of now if you understand the depth of the amount of issues which need to be taken based on that, you will now appreciate why data science is like, or we say data is the next oil, because that's where that is going to be the most costliest thing to be mined, and the output of that also will be so crucial itself. So data is going to be your next oil, and that's what we say, and that is going to be fundamental building block for almost all other technologies, data management and data science. So data is going to be key part of the future innovation strategy, and obviously once that is built in, those data science and data technologies are built in, then it is expected to drive benefits across all functions. Obviously here, like I said earlier also, there's going to be one of the technology challenges will be both how to do both at the same time. One, manage the data and maintain the data privacy as per the new privacy laws and rules, regulations which are applicable, as well, and manage and maintain compliance with the privacy law, manage it to ensure that it is like not biased and access and all that, then compliance with the privacy laws, and then as well as monetize itself, the data, because that's the next oil. So you have to monetize that value to drive decision making to take next level, to take the decision making next level. So that's why it's going to be a technology challenges. And here again, a lot of other technologies also will come into play. AI is also going to be play, and lots of technologies will play. So technology enablement in financial market is just going to be more and more entitled. So obviously algorithms, I'm sure a lot of people would have been heard of or used or might have used themselves also. So algorithms are being used very at a serious level in stock market decision making. These algorithms obviously have a kind of a common base with AI, but like there is some difference, because the algorithms, AI helps you to take decision making based on it needs to learn. Algorithms are a set of algorithms. It need not be AI based algorithms. There are a lot of algorithms which are derived from other sources as well. So again, these algorithms which are used, they are very vital to the modern stock trading. And then when in nature, like different algorithmic trading and investing module has been developed based on a lot of different algorithms which are already there. So obviously there is a common thing between both, but AI like has a self-learning mechanism, whereas algorithms are basically has a more like a human component in terms of learning, but they are still also widely used across both. So algorithms are new driver decision making. So what they do, obviously these algorithms look at the happenings in and around stock market, and then identify any liquid opportunities, and then they help you to make better and intelligent decisions when it comes to investing. Now, in order to do this, make this happen, a predefined set of, obviously, when you say algorithm, what's that? A predefined set of algorithms or instructions are placed, then which uses that to understand and then places order on behalf of client and investors. Obviously, the idea is to make faster decisions, because such a kind of instructions, if you give it to a human and try to do, chances are he may miss out on something. So there are going to be human errors, which are now will be reduced when you are using a machine to make algorithmic based decisions. Second, it will be very fast, because the human will take a time to crunch it, a machine will do much faster. So third, it will be more true to the way it will lie. There won't be any bias or human emotion which will come into play. So it will be more accurate. Accurate means not necessarily right, but accurate in sense more necessarily in line with the instruction. It will more accurately, it will follow the instruction than anything else. So make it more rational about everything. Okay. So these are going to be a new driver of decision making, and that's what is going to happen. And obviously, one very promising upcoming technology which is going to be used is distributed ledger, like as referred earlier, distributed ledger trading technology, which is also known as popularly known as a blockchain. I'm sure, and people talk a lot about cryptos, which are all driven by this blockchain. But we are not talking of actually the crypto side of it, which is more like an asset, another potential financial market asset, another type. But we are more talking about in the management of financial markets. This technology will come into play, this distributed ledger technology or the blockchain technology. So basically, what in a distributed ledger technology, what exactly it does is basically, I'm sure you had sessions earlier in depth of that, but I'm just going to tell you now overall. It basically combines the database technology, which is like, we maintain databases at different places, and cryptography. So basically what happens is multiple participants maintain their own copies. So that means the data is distributed, but there is a shared data set which connects to all of them. And so there is they can also maintain their copy, and they can, if they make any changes, they can update the records in a shared data set. So basically the copies are consistent because there is a computerized consensus mechanism. So all copies are like in line or aligned to each other, and they do not depend on any trusted third party which used to be there to validate or verify that information. So it's like a mutually computerized consensus mechanism is inbuilt through this distributed ledger technology or blockchain, and then they allow that helps each person or party to maintain its copy of the record and as well as make changes in a mutual data set. So that kind of thing. Now, what is the impact of this kind of technology? Distributed ledger technology has just come in terms of cryptography has been around, but as a usage of management and financial. So this is the impact what we are expecting it to have. So this technology is going to be the largest beneficial impact in financial market in areas like trade process, where you need to process trade and you need to also reconcile data at either end. In client support activities, then processing corporate actions where you bonus or dividends, or because you are generating or transfer of shares from one party to another. So processing all that, as well as automatic contractual agreements, because here there won't be any kind of the amount of disputes on kind of thing will be reduced because you have now indelible contractual in place thanks to the distributed ledger technology, which makes a record available without taking away from the ability to enter into new contracts. So these kind of financial market in these areas, this technology will make impact, and a lot of new age thing will come. The impact will seem much more like today how AI is very hot. DLT is not exactly that much hot, but in 5 years time you'll see this also becoming equally hot, or even earlier. I'm just giving you a random number, but like maybe 2-3 years time you'll see this is going to be the way when people it will basically penetrate and become parcel of each and everything. Then next technology impact you will see is on languages. So language will not be any barrier because the platforms will all be multilingual. So newbie investors from towns and villages, they will access financial markets in their own language, and that will drive the usage and innovation of new age financial instruments and products and increase the penetration and reach like never before. So virtually, whichever part you are, whichever language you speak, the financial market is available in your own way, and you don't, it's not going to be like you need to be an English literate person to drive this. Virtually, with today's new age platforms, the language is no longer going to be a barrier, and everything is going to be available in your respective languages. So that's it will drive the innovation, adoption, usage, and depth of markets to much another level, because when you have so many people who are currently kind of excluded because of these reasons, they will, when they start accessing it, the depth of the market or the width of the market will go to another level altogether. So that's another big impact you are going to witness in financial market of technology. Obviously, then there is an innovation brought by new age innovative fintechs. So obviously, fintech is probably the biggest startup. If you look at the startup ecosystem itself, is huge, and the biggest startup ecosystem is all around fintechs. So, and I'm part of one of the such fintech committee of at FDP, so I kind of know that. So the kind of impact the fintechs have, or the kind of the amount of money there is, or the kind of impact they are likely to have society, they're all going to be huge, because they will be able to bring disruptive innovation at a speed of light, or basically at very, very soon, much earlier than traditional tech finance companies can bring. So obviously, financial services company and technologies company, when they combine, they end up becoming a fintech company. So as wave of digitalization is hitting all other areas and including financial markets, you will see there are a lot of collaborations happening between financial market participants and fintech providers, and a lot of fintech companies will be born or innovated or incubated or traditional turning into fintech. All that will happen, and that will again take technology innovation to another step. So that is again a factor which is impacting or making technology move much faster in these kind of areas, especially in financing. So here are some of the opportunities for all these technologies in different financial. Let's take a okay. So here are some of the opportunities for all these technologies in different areas of financial. So let's look at some of the opportunities what these technologies will bring to the area. The area number one, sales and trading. This is going to be the area which is going to be impacted. The sales and trading which happens for organizations who are involved in financial market. How these technologies what we saw will impact, what changes it will drive here. So if you look at sales, trading, which also involves advising research, the trading and sales function is likely to change because the new technologies now which we are getting in, the new technology capabilities which are coming in, this will enable the automation of traditional core front office. So the traditional people who are involved in financial markets, there are a lot of front office activities they do. Those traditional core front office activities will get automated. So basically that will take away a lot of people out from there, and then these automation will push, because these automation will push requirement of another type. So of another capabilities altogether in the people who are managing these kind of functions. So what will happen is the traditional core will get automated, and through technologies which will be like using predictive modeling and trade execution. So all that, like requirement to somebody to call and then place an order, all that. So many front office activities are now reduced, and predictive modeling and trade execution have come into play to take that. The skills profile of people who are engaged also will change accordingly. So because of automation of trading practices while algorithmic tool will make sure a lot of higher volume will trade with less minimum human decision inputs. When this will start happening, this is already started happening. So what will happen is the trading staff, which are currently more like execution people, more doing execution or handling and all that, their skill profile will need to be upgraded to having quantitative and analytics discipline, because now those skills will be more required for these kind of trading and sales kind of function. Okay, obviously these roles will be supported by modern AI based, which are cloud based tools, which will provide services like sentiments, news, market volatility analysis, all that, which will enable these guys who are now upgraded to have much more quantitative and analytics skills. So they'll be using all these tools which are available to drive these services for financial forecasting and for risk management, for early warning signaling, and something is about to change and go wrong. So these kind of tools will be required to be used. So obviously the people who are using the tools, their skills profile will change, and will have more quantitative analytics discipline or dimension because of the tools or the nature of tools they are going to use. So they should be able to handle it. So this is what going to be, you will see change in there. Obviously, sales targeting, the way you approach your client, the people approach their clients, or they talk to them. So the new age data platforms, which will be supported by these AI modeling, they will actually help a firm to decide which clients to be targeted, which services to be sold, when to be sold. Like they will start anticipating that, and planning and targeting those services at that time. Launching of new products and services that will be timed, not more based on the traditional way of decision making, but more based on what models are telling. When should they launch products? When it is more likely to be successful. So I'm talking of financial products and services. I'm not talking of other products. Others also will happen financial. So when you launch a NFO, a financial offer of new financial products, which kind of clients to target, which areas to target, which time of the year to target, when should you launch? All those will be related to, or which kind of market condition to be launched. These will be all be supported. All this will be data-driven decision making, which used to be now human-driven, will go to data-driven. And they will also use it to anticipate these kind of things. So when they see a need for it, there will be a product available in advance of that. So they will know, they will also anticipate things like when a client is likely to face liquidity, when he will likely to have funds, which are the best time to talk and get conversions. So all this kind of new age sales targeting techniques will be done, and all will be supported by the new age technology platform, supported by new age AI modeling. All this will become part and parcel of day-to-day work. Then comes the relationship management. That area, which is like today, is more like a person-to-person kind of servicing, will involve more like a self-service and digital-enabled approach. And how do you make digital onboarding a much more seamless, easier, and how do you make it that it meets your changing client expectations and all that? So client interactions will become more independent, and that rely on automated processes that will enhance the overall experience and ability to process more data. So basically, you will not have those age-old processes and age-old way of doing it. You will have more like, like today we have, for example, there's a video KYC. You kind of automate the entire process of knowing your customer information. So you are more independent and you rely more on automated process. It will enhance the overall experience. Like, the customer can do it anytime, anywhere, from any device. He does not have to be physically present at a particular place with someone. Second, the amount of data which needs to be processed can be done more fast. More kind of risk management and data collating can be done. So the ability to manage and process more data. To when the client onboards, you are ready with actually a very much curated set of your products for him. So he's been offered product not based on his various kind of data targeting and all. So the relationship management becomes more self-service and digitally enabled approach to understand what the client is looking for at that point. Okay, so that will change. Then that what else will impact with technology implementation of these things, the post-trade practices, the trade support, trade processing, trade execution, all this will become all increasingly and completely electronic and automated. There will be smart contracts, like I told you, these innovations will be coming through all when DLT comes in and all that, which can, smart contracts are intelligent contracts. We can execute themselves based on pre-agreed conditions. So if a contract is signed and a DLT enabled on a digital ledger transaction platform, then on a particular day, it will automatically execute based on certain particular conditions being met and all that. So these kind of innovations will happen, and then again, it will take out a lot of human intervention and all that in these kind of processes. Then what we will also do is, because now since the processes are getting automated, even today also a lot of processes are getting automated. We have what is known as robotic process automation techniques and all that. These are early stage automation techniques. In future, they will become even more replaced by even more larger and fully automated and scalable infrastructure, which are based on cloud computing, which can basically scale to any amount of computing power needed to drive these kind of automation and processing. So what will happen, what we call in financial market terminology, a straight through processing, means you basically the entire thing gets processed in a one go, and it become more and more popular. It will not be like deferred processing, like first you place an order, then it goes to next stage, and then it goes to next stage. It basically shorten the entire cycle and completes the entire settlement in the singles in a very shorter duration. So that will basically, it means your settlement cycles, which we currently have in financial markets, which are like T+1, T+3, and all these kind of settlement cycles are there, which are lengthier. They will become shorter and shorter and shorter, and then we'll have they will be much speed and faster. And there are again a lot of opportunities to that will increase the amount of liquidity, increase the amount of trade possibilities and all that. So these all will be driven through these kind of automation techniques, which will come into play. Then the next thing which will change is the way the operating model of these brokers have been. So if you see today, large scale brokers or universal brokers who have moved on to a tech based brokers. So what will happen is they become more like they start providing their platform to others. So it become like a what we call platform as a service, PaaS is called, and they provide a platform backend to other people by providing them post trade services to other industry peers, and they start using their platform as itself like a strategic revenue generating from other providers. So they become like they start providing as a service, a platform as a service to others. So these kind of operating model changes happen where they're not depending so much on their client only to bring revenues. Other providers or industry peers also start collaborating through when you do this. And obviously these obviously will come up from large brokers, tech enabled brokers who operate at large significant scale and who have the resources and scale to do these kind of complex processing, which will involve. And this is why this happens is because these brokers would have already invested earlier in these kind of new technologies and infrastructure. So if they invested higher in these kind of infrastructure, integration and technologies, then naturally they will be more keen to bring in more business at a lower marginal cost, because their investments are already done in these kind of building large services, and then they will start providing services to others and drive the cost of the entire management of these processes much lower. So these kind of new operating models of survival will come into play when you see this kind of this operating model of this kind of services. So this all will happen. Then the next stage is new age fintechs. So what you'll see is that new age fintechs will come into are already coming into play. These new age market entrants will make into further incursions into new areas which was traditionally hardcore areas of brokers operations. These new age entrants will come. These new age entrants will also use this opportunity to directly offer to customers, and some of them will also use this to outsource to other outsourcing providers or big tech firms. They will be working along with other firms. So there will be niche fintechs, and there will be fintechs who are or big techs or fintechs or whatever you call them. They will be like working as outsourcing partners and providers for existing brokers, and some of them themselves will directly be offering the service to customers. So all that will be also be parcel of evolution of the application of this new age technology. Then obviously the team structure, the way people had team structure to manage all different functions, operation functions. Broker who are using more, they will be opting to use more external service providers. So operating functions will see some changes because now you have more external service providers. Then you will see vendor and contract management. Those operational roles will become more important because the interface with third parties will increase in size and significance. So you will see more operation effort going in these areas rather than internal in-house efforts. So you will see these kind of collaboration and change as the vendor and contract management will acquire more important because of more role for them. So they increase in size and significance, and naturally the team management also will change. Then risk management practices. The processes will become more automated. It will employ data analytics, cloud computing technologies because of that. More sophisticated tools will be used, such as AI, which will use to support this complex, analysis of multiple financial factors, risk factors. Based on these analysis, it will be able to drive optimal use of the capital, regulatory capital, liquidity, funding, all that will come into play, because the amount of money which brokers now keep margins at with financial company exchanges and all that, everything will come into play. They will look into that, how it can be optimally used, what regulatory allows it, what liquidity is available, how funding can be used. So all these risk management processes will become automated, and they will all be using this data analytics and cloud computing technologies to do that. So what will emerge in front of these kind of things? You will get a risk management intelligent dashboards. So you will get sophisticated data analytic tools, and they will understand all kind of risk, which will be potential risk, as they call. And based on that, it will look at data-driven decision making, and it will look at the what are the what kind of risk exposure you're supposed to take. It will look at that, and it will identify current amount of risk exposure, areas where risk exposure have moved or changed, and all these will be AI and cloud enabled, because there will be an AI to process it, cloud to manage it anywhere to and read anything, because they want to make it available digitally. And these will intelligent dashboards will actually will tell you what response to be taken, what monitoring need to be done. So the alerts, monitoring procedures, response times, all will change accordingly in line with the new age data analytics, which will drive this kind of decision making in financial management, in financial market company. Then obviously this is going to be a major, there's no doubt in that, the legal and compliance and fraud detection and all that. There will be a lot of functions which will come into play here. The technology will come into play, and they will be able to leverage all this technology. And then they'll be using like technology like AI, and they will use it to make predictive monitoring tools, and then derive analytical insights from structured and unstructured data both. And then based on that, what will happen is lot of reporting, because compliance need a lot of reporting, then legal means a lot of timely execution and all that. So all that will basically all reduce effort to do that and automate all this. So basically, for example, you need a market compliance and fraud insights, and a lot of data is there. Then AI application can help you do that. So not only it will reduce the time required to process that much information, but also improve your accuracy to get those information, as well as automate the regulatory requirement of reporting those information. So all the three things will get inbuilt inside this module of technology-driven legal and compliance module. So what will happen naturally when you are bringing more IT skills, if you see know-how of IT skills, will become more kind of a mainstream. So that way, say what used to be like value-added teams, engineering teams, IT teams, they used to be value-added. They were like they are like fringe teams. They will move from cross-function teams and fringe teams into business lines. Like the business itself will have one such technology guy inbuilt, because business and IT skills will kind of start merging. Roles will become more technology enabled, and such technology enabled guys or technology guys will start playing roles within business. So either your individuals within business will start becoming more technology literate, or more technology literate individuals like technology guys will start moving into business to manage these kind of stuff. Because of and all this will happen more and more easily because of easy to access, open source tools, a lot of new age innovations. All this will continue to emerge and become more and more happen. That's what is going to see. You are going to see. Then what will happen is you will see is that external third parties technology providers. So you will see that IT and internet shared service teams, which used to be like a team which the entire organization used to share for managing their IT infrastructure, internet infrastructure. These teams themselves will need to now compete with the external third-party providers who will come into play, and they will offer those kind of services at a much lower cost and much easy to scale, because they are so much providing. So third-party providers will start becoming more and more the norm. And IT, shared service group, which used to happen in these kind of broking is to share this. They will become more outsourcing and vendor management type of functions. They will start looking that because they will need to now manage and govern the processes which are involved when you are managing third-party outsourced system services. And this is already happening. In fact, for example, I can give you one example which I've drawn from my own company, Gumption Labs, where we are third-party technology providers to companies like Stockholding Corporation, to Edelweiss, to Kotak, and all this. So where exactly this is what is happening. We are like a third-party technology provider. We can provide. These companies are much larger and they have much larger IT teams, but their cost structure and innovation level also will be that slow and much larger. So we can provide those kind of innovative services at much scale, at a much lower cost. And that's why they are coming more and more and using services like us. And their IT team is becoming more like a vendor manager who is managing us to manage the processes now, which is involved when we are trying to manage these systems. So their focus has become more on the management and governance of these outsourced systems and processes. That is going to be the focus when you are managing technology in these financial markets and these financial market providers. Obviously, cybersecurity and AI solution will become a standard now. Like AI solution for cybersecurity will become a standard now, because the amount of these kind of events happening has become another level altogether. You will hear them left, right, center, especially if you can see how they are attacking crypto exchanges world over. And it's not like only in developing countries, it's all developed countries where it's happening. So, all these recently one crypto exchange recently got attacked, and these are running into, because the amount of value and everything is going much higher. So obviously AI solutions, cybersecurity will be there. It will improve the AI IT cyber attack detection rate that such an attack is happening, and respond to that, and also support functions to track these kind of security risks which develop over a period of time or get noticed over time, and respond in real time, not post-mortem kind of analysis when already things have happened. So these naturally will need this new age AI solutions for managing cybersecurity. That's going to be the next thing. So now, if you just summarizing the brief benefits you reap because of technology which came into financial markets or stock markets. So we have seen how different technology impactors have or will impact stock market, and how they will advance the investing scene. So one thing is very clear: stock market technology is going to be very indispensable part of the entire sector. Technology has completely altered how financial markets are conducted, right from the time the IPO happens of the stock and stock gets created to the exactly trading of it. It is virtually changing everything. So the days of relying manual intervention, piles of papers to apply for stocks, all gone. You are now apply all this with investment on the go with smartphones and robo-advisors for managing investments, algorithms for doing trades, which are nearly impossible based on manual things, and then using big data to do research, and then or manage large chunk of data. So these are all different ways. You've seen are ways where technology will be financial market will be benefited out of technology. These are all different ways it will happen. But there are certain concerns also which will come when you adopt technology in financial markets. Already some concerns are arisen of it because of adoption of technology. So we will discuss some of these concerns at this time before we find out. So first of the concern has been hacking. Now, very much cybersecurity is one of the major concerns because of adoption of technology in financial market. And basically what cyber attacks have gone in size and length. Security concerns include risk associated with attempts to manipulate data, introduce fraudulent data. Cyber attacks are threatening the availability and integrity of a system because they can bring the entire down, then take out the database, they can leak the database, they can they virtually totally make make this very difficult to it's a very big risk basically in short. So cyber attacks, and so here where technology will come into play, because what, thanks to your connectivity what we have, even your smartphone can be easily compromised today. So you can lose personal data or financial data now. Right. So what will happen is that here technology will come into play, and Second concern where, so that is the first concern, because of so much technology connectivity, you are exposed to cyber attacks on those kind of stuff, which can destroy and disable an organization very fast, because the entire organization now today data enabled. Second is the second concern what we have is the lack of human touch. Now, because of advance of technology, you see human interaction will further and further become very, very less. So the earlier personalized touch of a human advisor, which were there while handling sensitive financial matters, that will be missed, and which could impact especially those who are less tech savvy, because now they will kind of struggle to handle, because a new age robo advisors needs kind of a little tech savviness on your part, and also the elderly who also fall in that category, where these new age financial products are generally, there have been a lot of cases where people have missold new age financial products to elderly and gone and walked away with their money or their hard-earned money, and they made a huge losses for them and all that. So these are some of the things which has happened in the past, and that kind of thing is because monitoring and managing that thing, because when humans are not interacting and machines are doing and something, so those kind of things which are there, so that will impact some kind of those kind of things, like somebody can misguide people who are less tech savvy and elderly, and that can happen. So here the ability to put responsibility on somebody will become difficult. So that whereas in a human advisor case, that sense can be built in. So those kind of thing will happen, and lack of human touch will be a concern kind of thing which will be there, especially those who are less tech savvy. So here we see the conclusion is that it's very evident that financial technology has changed the face of it, and it's just the beginning, and more technology innovations will unfold to time to come. So that's where you will see and how it has happened. And today we discussed the concerns, the challenges, the impact, and how we see them, and how it is likely to, and what technologies which are going to play in the time to come. I hope this session has been useful, and now I'm kind of available for your questions and answers. So if you have written questions on chat, I would take them, but I don't see anything. So if you have any particular questions, I am free. You can write on chat or speak or whatever, and we can interact to understand anything you want to understand.
Thank you, Anuraag sir. Now the floor is open for participants to raise their questions. Anuraag sir, I have a question for you.
Yeah, please.
Especially this RegTech, that is regulatory technology, is a part of Fintech, and companies are spending millions of dollars towards especially compliance requirements, and sometimes even for fines and penalties. And this is a very, very emerging area in the umbrella of Fintech.
Yes.
And even in India, we have a lot of startups in the area of RegTech.
Yes.
So you were also telling about the cyber attack and various security and compliance issues. So how these RegTech firms are useful for the financial markets, especially with the adoption of technology. So is there any role that these RegTech firms have to play in the financial markets due to adoption of technology?
Yes, absolutely. See, RegTech is going to be a very, very important point, especially because these kind of tools and the kind of things which is required in a RegTech, like submission of reports, things like that. You will need to, when you're applying for RegTech, you need to do all these kind of compliance reports. You need to automate a lot of stuff, and a lot of data, amount of data which is coming in financial market is huge. So the amount of data which needs to be reported also is gone to another level. So now all this new age fintech which are coming up in RegTech area, especially, they are building exactly the kind of solutions where they will use AI based, they are already using AI based to glean through this market data. And in fact, this is being used by the regulator themselves. I know a case study of SEBI, where SEBI has floated out a paper and hired fintech firms to run to develop these kind of applications which can process market analytics or market data, so that they can get the potential case studies of where fraud or manipulation or these kind of things happen. So so regulators are using it for managing processes at their end, and they are involving new age fintechs because they have those ability to build these kind of innovative platforms, because these platforms don't exist right now. So obviously you will need to be built out of scratch. So, and these kind of thing, when you're building, it's not an available ready-made product, then you generally look to fintechs to do that. So fintechs which are working in RegTech area, they have a lot of promising applications from the regulator side, because the regulator keeps on posting such problems and ask for companies to submit solutions. So that's one is the areas where working with the regulator himself to understand at a macro level what kind of governance issues or RegTech data. The second portion is working at a financial provider level, financial service company level. Like look at a company like Bajaj Finserv, which lends into micro amounts into huge amount of money across so many things, so many so millions of people out there, they are being lent loans, they are being given loans. Now that there's a regulation to be done there, that the amount of data which they collect, what happens to the data. Now if they're NBFCs, they have to report certain set of data to their to the regulators like RBI. Now once they have to, for reporting huge amount of data across all, that kind of regulation or that kind of thing, again they will require services of these kind of fintechs to come up with the kind of solutions which can automate all these kind of work which currently are happening out of manual intervention, like like robotic, simpler automated automation tools are being used. They will become more sophisticated automation tools, because the amount of complexity of the information which is coming in, the quantity of information is coming in, is all going through the roof. So naturally here again, RegTechs will have a lot of intelligence, and they will build these kind of intelligent dashboards. Because what will happen, the more information you have, more difficult to make decisions. So what will happen is, these fintechs which work in RegTech area, they will bring these kind of intelligent dashboards. So they will use this to determine compliances, lapses, compliances, dues, compliances, timelines. It will help them to alert them in advance of any such kind of misuse, because nowadays there are a lot of requirement like margin systems, for example, the margining which can be given to a customer while he's trading on his portfolio. Those need to be regulated, because there is like you said now, there is huge amount of fine and penalty if you cross the line. So it's much better to build these kind of intelligent AI or cloud driven dashboards which can monitor this data, so that you don't end up paying huge amount of penalties. And penalties are not just monetary nowadays, it can go to much serious level also. So that's why you need to, that's why there's a lot of scope and work in the RegTech area, for not only for the regulator as well as for the provider of these financial products and services.
That's what in RegTech, another part is subtech, supervised technology, not just assisting the corporate clients, but also the government and other regulatory bodies as well. So as you said, Hasni has raised hand and she has something to ask you. Dr. Suhasini, please.
Yeah, ma'am. I just wanted to ask the same thing which you have asked just now, that we have subtech, supervisory tech, and we have that RegTech. So how converge both things and how different they are?
Which is the other tech? RegTech I heard. Which was the first tech you said?
Subtech, supervisory tech, subtech.
Okay, see, it depends. See, RegTech, okay, I'll tell you. RegTech primarily is focusing, we're working with the regulators. So that's why they work, they're called specifically RegTech. Supervisory tech is not about just regulatory. It could be, it's not about regulation compliance. Supervisory tech is also by like a organization level, certain guidelines are there. Those need to be complied with. So supervisory tech will also look into much wider area and much different area, because they may not have penalties in supervisory tech. Supervisory tech are like, but there may be strategic interpretation of this. So supervisory tech is more strategic in nature. Regulatory tech is more compliance in nature. Is that clear?
So whether or not supervisory, supervisory tech, suppose there are certain regulations. So what SupTech or supervisory tech is doing, they are checking that whether or not a company is following the regulation.
Okay, so see, so I'm saying basically you can, the definition can overlap, but the functioning is similar. They are both tech in financial areas looking for this. So
Okay.
the definition can overlap with that. But I'm saying supervisory tech can go a little wider in depth, in definition, than just becoming only related to regulation. It can also supervise other stuff also which are not related to regulation also. I'm saying it has a much wider canvas.
Yes, so it's wider, might be checking that whether or not the operational things they are supervising, that if the process is this, whether or not it is followed.
Yes,
to
exactly.
produce
Whether the turnaround time has been met or not.
Yes. Okay. Thank you so much, sir. Thank you.
This is Balasubramanian from Bangalore.
Yes.
You are talking about robo advisors. Is it for helpful only for like ICICI Direct, HDFC, or maybe for a small investors will it be helpful?
Yes. See, robo advisor is nothing but about automating the decision-making system. Now, just look at a person like somebody who has a portfolio of 25 lakh rupees in stock markets. He would have invested, and after some time, if it is not his core work to invest, then he would lose track of it at some point of time. Once he loses track of it, what will happen after some time? He will realize when he studies his portfolio, maybe 2 years later, 3 years later, there are a lot of improvements he could have done that. So that's where a robo advisor comes into play, because a robo advisor, the advantage here is that they will not be biased. Second, they are driven either by algorithm or through AI, or there is some kind of a decision-making system which is working as a process. So when you work as a decision-making system as a process, you are more in tune with the philosophy of investing rather than you will go out of tune. So those kind of robo advisory based techniques are very much applicable for individual clients also when they are managing their own.
But how do we approach them? Actually, I don't understand that question.
Okay, how do you approach these robo advisors to apply
as
to
an individual? Yeah.
Okay. So I'll give you one example. I don't know whether it's right platform. For example, we have launched a service called Fund Expert. Okay, a Fund Expert is basically a software, and you can download it free. As an individual, you can use it free. But it is a basically service for such robo advisors, for such financial advisors to offer robo advisory to their customers. So we basically market it to different financial advisory companies who use our service to give robo advisory service to their customers, because they also have to scale. Okay. But as an individual, if you download Fund Expert app on the store and you go and start using it, you will see that you yourself can manage it on your own, because it is designed like that. So like that, you approach basically the person who's providing the services to these industries. They themselves also can provide directly to end user, and that's what I'm saying here. It is in our case, we are also doing that. Like that, there are other also providers. I'm sure we are one of such providers, and we are providing some of the largest in this industry. So I'm just an example which I know I'll be able to relate to that easily. So otherwise, yeah. Yeah, Mr. Balsu, you're saying something?
No, I said it's fine. Thanks.
Okay. Thank you, Mr.
The presentation was very exhaustive. Thanks a lot. Too much to digest, actually. Anyway, once we sit back and then go through this, we get a lot of insight. Thanks a lot.
Yes, because it was quite comprehensive. That's why it was exhaustive.
That's right. That's what.
It looked at the challenges also. It looked at the impact also. It looked at how it was impacting individual to how it's impacting the
and into technology finally. That's right.
So,
and you covered AI, big data, then got into that, how it is helping, then went into robotic. In fact, majority of the technology areas are covered.
Yeah, so basically the focus on this presentation was more on application in relation to financial markets.
That's right.
But you can also assume that this knowledge obviously can be applied.
That's what your challenges and all, whenever you said, all these can be applicable to any industry, so that, we'll have to know all those.
Correct.
That's good. Thanks.
Yes. Sure. You can, I'm glad you found this. Any other questions we have on the thing?
You were saying also some people are can be tried on with an unreal money. You can try use a real money.
Correct,
I
correct.
didn't understand that portion actually.
Okay, I'll tell you. So
How do
we
you play that?
yeah. Actually, so I'll tell you, we have a product called Traders Cockpit. Okay. So it's called traderscockpit.com is the website. So what happens there, if you go and register, you can subscribe to a module where what happens is you can actually place orders like how you're placing orders in real stock market. Like that you can play. You will get an application where you play and you place orders and you trade and invest and see how your performance is. But you are not actually playing with real money, but you are placing orders in real markets. Did you get the point?
But whose money is that then when I'm playing?
It is not a real money. It is like when you place an order, the order goes through like a stock market orders, but actually
it's not getting executed.
It's not executed. It just goes, it takes the data, comes back and says, okay, you got executed this rate. So you actually get a feel as if you have really done an order.
Virtual, okay, fine.
Virtual.
Okay.
So that kind of thing. So that actually, once you have done that, and we have seen this with real practice, because that's why the name is Traders Cockpit, because it gives you a simulation. It gives you that kind of effect. What happens is, before you go and really try 5-10 lakh rupees in real market and end up losing quite a bit, you can actually try it here with a real kind of that is the emotional component comes still there, because still you have to place an order, you have to say yes or no, you have to see them execution, you can't erase anything. So it is looking and you see a real trade book. So it's a real record of what you have done. So that kind of is found to be much superior than writing on a piece of paper, because that is not so much. You are not sure what time you wrote. Did you write after it was successful? So here there is no question of any like fake. It's a real time trading element which you get into. Okay. So those kind of things we give you those kind of services. So I was talking about such. We are also one such fintech. We started giving these kind of services. So I was talking about such services are available today thanks to technology, which allows me to still go to a real-time server, but still does not allow me to actually place an order.
Okay, fine. Okay, I got it. Thanks.
Yeah.
That's called tradecockpit.com. Huh?
Traders Cockpit. TRADERSCOCKPIT.com.
Okay, thanks. Let me check.
Yeah, sure. Please go ahead. So that's why I was drawing that inference in that example, but that is a generalized example. Virtually, this kind of it's like ability. It's like today those kind of technologies were earlier used in in normal when you learn how to fly an aeroplane, you simulate you're flying in kind of a cockpit which is artificial cockpit. Right. It's not real. You can't really take a trial directly in a live plane, right? So you drive your planes in a simulated, like a space center where you.
Yeah, understood. Like all simulators, like you have a virtual machine,
correct.
Virtual,
so you have simulator,
artillery, virtual military applications.
Correct. So similarly, we made a virtual trading, and that's why called Traders Cockpit. So you are in a cockpit, and you can see, and like how any cockpit is, there are a lot of dashboards, and you can see a lot of analytics, and then you can take your decisions, and then you can get an idea how good you are. And once you confirm you are good enough, then obviously you can try with live money and all.
Okay, fine.
Good evening, sir. This is Dr. Ritu. I saw your website. It is a chargeable services or is a free service, sir?
Jemima, if you are just reading the data, a lot of data on that site is free. So you can just register and use a lot of data we provide every day. These are all live data from live analytics from markets, and that is free. Okay. There is also, but when you try, like you want to yourself place an order and simulate and all that, then the marginal cost is there. You will see 500 per month and all that. It's not very.
Okay. For the simulation, we need a 500 to move. Right?
Yeah, 500 a month. You just pay 500 a month and you can.
It does work like a money control. We have some portfolio. We can make up a portfolio.
Correct. But in money control, what happens? You have to enter the portfolio detail and then you are just watching it. But here the difference is you are actually placing a buy order, sell order, execute order, close order, limit orders, like how you trade in a broking terminal, that kind of.
Okay, I have one doubt, sir. I'm a finance faculty. I have one doubt. We have clearing members, right? So we have three types of clearing members. One is trading member, one is trading cum clearing member, and one is professional members. Correct. Right? Correct. So can you distinguish between second and third?
Oh, that's a very what do you say is a technical terminology. So if so basically it means is trading and clearing member means trading member who can put orders, but his trades need to be cleared by other clearing members. He is not a clearing, because a clearing member needs to be a member of clearing corporation. Every exchange has a clearing corporation. So if a membership, you may be member of an exchange, but you may not be a member of the clearing corporation. Okay.
Okay.
So if you are a member of an exchange, you can place an orders, but your trades still needs to be cleared by a clearing member. So you need to go to a clearing member and he will clear your trades. So there is a process of clearing your trades. So that's it. But if you are yourself a clearing member, then you are become a trading cum clearing member. And if you are a professional one, then means you can clear for others also.
Okay, can you give me the 3 examples of this? I'm just getting confused.
I don't know, like I know there's a broker who is a member of exchange, but his trades are not getting cleared. So he goes to ILFS. ILFS was one large clearing member who had a clearing. So he will go to ILFS, all the trades he will post to ILFS, and ILFS will clear his trades at the exchange. Okay. So ILFS is a third party outsourcing who is clearing exchange, because ILFS is a clearing member. Clearing member has to be a member of the clearing corporation.
Clearing corporation, CSDL or NSDL, right?
Correct. So there is a clearing corporation is ICCL for Indian clearing and NSCL for national NSC clearing. So they have their clearing corporation companies, and you need to have a membership. And there is another net worth, deposit, lot of requirement. So every member who's a member of exchange may not be able to afford to become a clearing member.
3 lakhs rupees, 300 lakhs rupees they have to pay.
So I'm just giving you an idea. These numbers.
I'm getting confused because I'm just, as you have done NISM module, so I'm preparing for equity derivatives.
Correct. Equity derivative, this chapter is there. If you read
chapter is there. So I just get confused and I'm not getting a particular example. So
no example, but I'm just giving you because we need to know which companies are which one what. But I know ILFS was a clearing member and he used to clear for a lot of brokers. So I know there was a broker like which were not clearing member themselves. So they used to used to be a charges. So it's a chargeable service. So clearing member will clear the trades at the exchange, and that's why they are clearing members, because their jobs are much more. Now, if you are a clearing member, you can be a self-clearing. That means you can clear your own trades. Then you become trading cum clearing member.
Okay. So
a professional clearing is somebody who's clearing for others, not himself. So if you go to, there is a table in that NISM equity derivative, it will give you differentiation. Who can clear for himself? You just read that table. I think it will be clear.
I do that. And then for best example, I can take Kotak Securities, SBI Securities, HDF Securities for the trading.
Right. So Kotak Securities, may be large enough. They may be having, they may be trading cum clearing member.
Yeah. I'm talking about that.
Yeah. So they may be clearing for themselves because they are large enough. They have large amount of data. They can afford to spend money to invest in having their own clearing division in the sense.
Thank you.
Yeah.
So if there are no more questions, then we can wind up the session. Participants, anybody else? Okay. So thank you, Anuraag sir. Especially today, there was a high-level meeting, that is annual review meeting convened by our Union Finance Minister, Mrs. Nirmala Sitharaman. And in that meeting, actually, she has urged public sector banks to extend assistance to fintech sector, especially. So that's the kind of move from our Union Finance Ministry as well. So today, having a session from you as a founder and CEO of a fintech startup, it's really nice to hear from you about the technology applications in the financial markets. So thank you so much for that wonderful session and all your insights about what are the different technologies that are used and what are their applications and what are the challenges that are being faced, especially in the financial markets. So being an expert in financial markets, it was nice to have you here today to share your expertise. So thank you so much for that. I know you are a very busy person, and amidst your complete busy schedule, you were able to allocate to us for our session here. So thank you so much, Anuraag sir. And I look forward to more such sessions from you. Thank you so much.
Thank you, ma'am. It was my pleasure also to share my insights and knowledge, whatever I have. And I acknowledge all the appreciation which the audience has given. Thank you, and all the insightful questions they asked. I wish you all the best, and I'm great. I'm sure you're all enjoying this 5-day program, and you will take home a lot of knowledge and learning, and you will disseminate in your own capacities. Thank you so much, and wish you all the best.
Thank you, sir. So dear participants, now we come to an end of the day 4 sessions. So tomorrow we will all meet again, and the tomorrow's sessions will be, the first session will be handled by Mr. Krish Shrikant. He's a consultant in the payments sector especially, and he'll be joining us from Saudi Arabia. And then the next session will be handled by Dr. Ashinder Kaur. She's a professor of operations and supply chain from IIT Madras, followed by the next last session, which will be handled by Dr. V.M. Ponnaya, our Dean, College of Management at SRMIST. So thank you all for joining us today, and we will all meet again tomorrow. So tomorrow also, before we start the valedictory function, we will also have the online test where we can spend 30 minutes for that. And after that, we can go for a short valedictory function. So thanks for joining us today. Thank you.
1 second. Will the valedictory will be around 2 o'clock, ma'am? So that test will be, because we have to come back from the institute to write the test. That's why I just wanted to know.
If you want, okay, we can even post the link a little early so that you can complete it and be ready for the 15th session. Which will be around, say, 1 hour. And after that, we can spend around 30 to 45 minutes for the valediction getting.
Okay, ma'am. Thank you. Thank you so much. Thank you.
Okay, so thank you so much.
What is the syllabus, ma'am, for test topic?
Sir, nothing like syllabus is
same what we have covered in this.
Yeah, sir, the concept that we have discussed these 5 days.
Okay.
Based on these concepts, and only 30 questions, all are MCQs. So you need not worry about that.
Thank you.
It's like, again, we are a student and you are thinking about our examination after this.
Ma'am, we are not teachers, we are senior learners. Our students are junior learners. So we all have to keep learning. We all are learning, and the learning never stops till the last day of our life.
Even it is going to give us a feel like we still are. Yes, ma'am.
Okay, so that's so nice to have all of you here.
Thank you.
Thank you so much. Thank you.
Thank you, ma'am.